Hey all, welcome to Share Trek. This is Raj here. Friends, today's video is on the topic of investment, but I want to address a few things that I have come across and from our subscribers and others who do comment in the channel. And I want to address those things. So that's what I'm going to talk about. So today we don't have any disclaimers or anything. Overall, it's going to be an explanation of how the channel works and what can be expected. So friends, first of all, I'm really happy that many of you are engaging in the channel through the comment section and are coming up with wonderful feedback. And we have some subscribers who come up with suggestions for new tickers to be covered and give us market intelligence about other shares which are going up and down and on all that stuff. It's wonderful. It creates a vibrant community. So thank you so much for that. And also thanks for giving me the honor of receiving questions from you, whether you can buy a particular share at a particular price or not. So I'm deeply humbled by the fact that you're asking me those questions. And that's the reason why I have today's video, to explain why it is difficult for me to answer that question. So if we look at portfolio for any individual, right? The concept is that you have got, let us say, $100,000 that you can invest in your portfolio. Then you have to, based on your age, decide how much of it you're going to have it on equity and how much you're going to have it on debt instruments, right? And then within the equity, you decide how you're going to spread it among the sectors, whether you're going to have ETFs do the asset allocation, or are you going to individually pick up shares and do the asset allocation yourself. So the distribution into various sectors is one way of spreading the risk, so that if one sector goes down, another is still up to catch the slack, and vice versa. So aiming for 100% of profit every time is next to impossible. And anyone who tries to do that is likely to burn their fingers very badly. Right? And I have done that many times in my life, trying to think that every deal should get 100% of the value that you can get from it, 100% of the profits. In the process, we make mistakes. So the first thing I would say is that do your risk analysis and try to find out how much you want to invest in your portfolio. You have other asset classes also, like real estate, and you have GICs or fixed deposits or government deposits or bonds. And then you have gold, and of course you have stocks. And within stocks, you have ETFs, which can actually do the job very well for you in terms of asset allocation and risk management. You can go for medium risk, high risk, dynamic kind of ETFs. The choice is yours. But the most important thing is you know your profile much better than anybody else. You know your financial situation. You know how much you are earning. You know how much you are spending on a daily basis. You know what is going to happen after 2 months. Maybe your child needs a brace, or maybe there's a wedding in the family and you have to fly across to a destination wedding. All of those things are going to cost money. I don't know what you're up to, right? So I don't know your situation. So I can't give you any feedback on when to buy which shares. What I can do is I can share my thought process based on my risk appetite, what I'm doing, what I'm thinking of a particular share. That's what I'm doing out here. And you have seen that in front of you. I made profits on Ginkgo Bioworks, but I don't have any Ginkgo Bioworks in my portfolio right now. In the past, I made profits. I made some profits on Bluebird Bio, but I then took a loss and sold it off a few days ago and put that money into NVIDIA. And again, that's a case in point. In NVIDIA, I had conviction. I put the money into it and the stock went down. But I'm holding it for a longer period of time because I am convinced about the stock, and also it is within my risk appetite. And if I lose some money out there, it's not going to destroy everything for me. So it's within my risk appetite. So I'm doing that. But I don't know what is your risk appetite. So that's very difficult for me to say. Now, let me also tell you something else, that if anybody on a YouTube channel or TV tells you that you have to buy this at this price and sell it at that price, right? You have to yourself evaluate your situation, because there is nobody, I can give you with a guarantee, there is nobody anywhere on any analyst platform or wherever who can have 100% guarantee that the deal they ask you to make will definitely yield results. many times people go wrong, but sometimes people go right so spectacularly that they become investment gurus. And after that, people start following them, and they may make mistakes and they may make some good calls, but they have a following, and people follow them until they make a spectacular mistake, after which they may lose out on people. So what I'm saying is that picking up stocks and deciding what to invest on, what to buy at what time, and what to sell at what time is like getting married, right? So we have this Indian subculture where parents arrange the marriage for their children. So I got married to someone whom I loved. I met in college and I got married. And at that time, I told my parents that, you know what, I don't want to blame you for your mistakes if I get married, because it will be your mistake and you will not allow me to blame you. So I'd rather make my own mistakes. So I'm going to do my analysis, I'm going to do my due diligence, and I'm going to get married. So that's what I did. So the stock is also similar to that, right? Any stock that you're going to buy, the amount of money that you're going to put into your investment portfolio, it all depends on risk management. And how do you know what risk is good for you? Well, start learning the fundamentals of asset allocation. As you grow older, more of your money should get into fixed income type of instruments where the principal is guaranteed and also interest is guaranteed. The returns may not be spectacular, but they reduce your risk a lot as you grow older. And when you're younger, you want to have more amount in the equity side, and you can take risks also. You can take extreme risk shares, and you can take moderate risk shares. All of that is possible when you're very young. As you approach middle ages, you have to be very circumspect about how you're going to allocate your portfolio. And that's where a good financial planner will be helpful, because they have the tools that can help you to identify your risk factor. And one of the most important things that I would always tell to any of you guys, okay, we have women also listening to this channel, but especially for the guys, you have to remember that at the end of the day, your spouse is going to have a look at your portfolio. She's your manager. And if she sees a lot of red out there, you are going to be in big trouble. So just be careful that you manage the expectations at home as well with your partner or a spouse, that they are on board with what you're doing, because these share purchases can be mighty risky. Nobody knows what the market is going to do, right? So that's the way I would frame it. So friends, I'm here to share my thought process and the way I do my technical analysis. I may be right, I may be wrong, but I'm sharing it with you. And I'm really glad that some of you are interacting with me and pointing out what I'm doing right, what I'm doing wrong, what you guys are doing, and the way you are thinking. So it's really good. And that's why I made the channel. I'm a retail investor. I don't claim to be an investment guru. To be honest, I'm a retail investor. I've been investing for almost 2 decades. I have investments in India. I have investments here, and I'm actively managing all of them. So over the last 2 decades, I have learned a lot of things through sheer painful experience. And I'm trying to bring it to bear in my analysis and in my decisions. And I'm just sharing that with you, with the hope that you will share your experience with me, and together we become a community where we get market intelligence, and we want to be a strong genomic and AI community. So anything to do with genomics, anything to do with AI from the stock market perspective, please bring it here, put it in the comment. I will always appreciate that. And also if someone is asking, should I buy something at a particular price, a particular stock, I invite others also to respond to that message by giving them an idea of what you think about the stock. I don't want you to advise them to buy it or not, but you can give them the pros and cons of the stock so that they can do their own due diligence and invest. Because the last thing I want you to do is invest it based on what somebody said and then go and blame that person when the investment doesn't come out well, right? We don't want that to happen. We don't want you to lose your money. I don't want you to lose your money, right? So that's the reason why. The second logical reason which you can understand is that let us say you ask me at what price can I buy, let us say BTC, okay, Bitcoin. At what price should I buy Bitcoin? Is it the right time to buy Bitcoin now? And I'll probably come back and say, let us say I tell you, okay, it's the right time to buy Bitcoin, right? I might be looking at all the analysis and I must be thinking, yeah, this looks good, right? And 10 or 15 minutes after that, I see some news item and I decide, no, it was a wrong idea, right? You already gone ahead, bought your Bitcoin, and you are going to have whatever trouble you have. Not that I'm right 100% of the time, but the moment I tell you that you buy, say, Bluebird for 198 or PACB for 145 or whatever, right? The moment I tell that to you, then it becomes a huge responsibility, because then I have to update on every minute that I change my mind about that stock, and you're going to go crazy, right? But when I'm doing it for myself, I'm at peace with myself. I'm thinking I want to buy Bluebird in the morning, and by afternoon I'm seeing a lot of movements in the market. I'm seeing news items and all, and I decided Bluebird is not good enough. So I may just change my mind, and I have the liberty to do so. But if I start advising you guys on what price you have to buy something, then it'll be tedious for both of us. And I don't have the bandwidth or the capability to follow up with you and keep on informing you how my thought is evolving and why what I told was a buy just 10 hours ago is now a sell, right? So that's the reason why. So friends, once again, thanks for engaging with the channel. Thanks for watching my videos. But I would request that you also watch my technical analysis for the day, where I do the index, I do the VIX, and then I also look at the various shares which we have got in our AI and genomics platform. So let us have a little bit of interest in that area as well, where I try to explain things. And you can also get back to me and let me know if I have got something wrong. And together as a retail investor community, we can make good progress. Okay guys, so with that, I would like to wish you a very, very happy weekend, and a long weekend at that. And I'll see you soon. Bye for now.